What's going on, guys? It's Cash Booza, and today was the jobs report. I have been telling you guys that Friday is gonna be the biggest mover of the market. And what did we see? We see record selling on the S&P. We saw record selling on the Qs, and we saw record selling on the IWM. The wix went up, Nvidia crashed, semiconductors crash. It's gonna be a whole lot to cover today, so let's head straight to my screen. So looking at the jobs report, the US jobs report shows hiring has shifted into a low gear, and ahead of the Federal Reserve meeting to set interest rates, employers have added 142,000 jobs in August, and missing expectations, fewer than what everyone had predicted in the past. And this had a cataclysmic effect on the stock market. Everything that we loved was trading lower. Tesla was trading lower. S&P was trading lower. All of our favorites was trading lower. So let's see what else is going on. The Nasdaq 100 plunged 5.9%, worst week since November 2022. S&P 500 dropped 4.3%. This is the worst week for S&P 500 since March 2023. And we've got a lot more data to cover, so let's keep going. The US jobless claims moved down for the fourth straight week, lowest since June. And in a recession, we would expect this number to trend higher. In a recession, the jobless claims is expected to rise very, very rapidly. We're just not seeing that just yet. Shows how resilient the US economy is, or that's what everyone says. US economy is resilient, strong. It's just the Fed pumping a lot more money in the system. We're going to talk about that, and the fact that the interest rates are coming down. You got to learn how to trade this stuff, guys. If you know how to trade the ups, the downs, the all arounds, you can make money anyhow. It doesn't matter if the market's going up, it doesn't matter if the market is going down, if the market's trading sideways. If you know how to make money in this market, you'll make money. We'll keep going. We'll talk a lot more about making money after this. This week, we saw a significant fall in the government bond yields that, interestingly, did not save stocks from having one of their more difficult weeks in quite a while now. And an almost 30 basis point drop in the 2-year yield, and the 2-year 10-year curve just uninverted. When these yield curves uninvert, guys, you know what happens? That's when the problem starts. That's when the economy is like, okay, the effects of all these high interest rates are starting to materialize, and we are not sure what the economic growth of the economy is going to be in the near future. So the investors get scared and they start pulling money away from the system. And when that happens, the stock market suffers unless the Fed starts pumping money back into the system like we saw in the era, and that's when the system kind of restarts. It's pretty cyclic in my opinion, and the cycle continues just like that. You see, the dollars that you're holding is just paper currency. It's nothing else. They can bring this stuff up from thin air. There's nothing backing this paper. Whatever you see those Benjamin Franklins on those $100 bills, nothing backing that. Used to be gold, but after 1970s, it's pretty much nothing. So we'll talk about that later. The stock market, the Dow tumbles, but Nasdaq is clear loser. Tesla, Nvidia racking up sizable losses. Speaking of Nvidia is down 13.8% just this week. Look at this big bearish candle. The problem starts in Nvidia. We're gonna mark this level. Pay attention. The level is $90. If it goes below $90, if we see the next week the plunge continues, if the selling continues, and if it breaks below 90, if we see something like this, another big red candle right here, and a closure below the 90 level, that's when the problem starts, and that's when we know that something is truly wrong in the semiconductor market. So we'll start off today's technical analysis with the semiconductors. Look at this, the semiconductors down 11.6%. What a bearish candle, closing on its low, almost at its low, and still trending lower. We'll take a look at the daily chart, what's going on the daily, and it has crossed below the 200-day moving average. And look at this, we talked about this right on the cues yesterday, that if we see rejection wicks, the probable move is to the downside. That's what we saw. Where is my sad doggy, the crying doggy? Here it is. The doggy is crying. Semiconductor traders, the bulls have been butchered, and the market is heading lower. We'll talk a little bit about the S&P 500. We'll take a look at the SPY. What's going on with the SPY? SPY was down 1.68% and clearly heading lower. This is gonna continue unless the system resets, and the only way the system resets, guys, is when a clear recession hits the economy. And when the clear recession hits, you know what they're gonna do? They are gonna do what I'm gonna do on my screen, which is flood the system. They're gonna flood the system with the money. And when the money hits the economy, when the money hits the stock market, that's when the recovery starts. We saw this in 2008, we saw this in the 2020, and this is the only way out for them to pull all of us out from the trouble. We'll continue the show with the Qs. Let's take a look at what Qs did today. Let's take a look at what the Qs are doing today. So the Qs were down 2.68%, a clear percent higher than the S&P 500. The Qs are tech heavy, expected to be lower, expected to take a bigger hit than the S&P 500 because it is so tech heavy. Because of the interest rates, the high interest rates, and how fragile this economy is. And we clearly saw what happened with the jobless reports, and it's just everything coming together. Everything is just so intertwined in these markets. The market on the Qs, we talked about this, the two rejections, and boom, the clear downside. The Qs are heading to the 200-day moving average. That's the level that I'm marking, 440. Take a clear look at 440. I think what's going to happen is the market is going to come down. It's going to take out 440. And then the bulls are going to step back in, and they're going to be like, okay, now's the time. Now all the stop losses have been hunted out. The liquidity has been grabbed in the system. Now let's push the market higher. And that's when the push starts. We'll take a look at Apple, the biggest stock in the S&P 500. Didn't take that big of a hit, up down about 0.7%, but a clear story that's playing out across the board. The VIX jumped 12%. Okay, this is interesting. We will take a look at the weekly chart on the VIX. The VIX closed almost at its high. It's a very bullish signal for all the volatility traders. So the VIX closed almost on its high, and next week what I'm probably gonna see is something like this. We're gonna see VIX jump a little bit higher, and this market is going to continue to come down until the investors feel that the market is somewhat stable. But the most probable action for VIX next week is going to be the move higher. We'll take a look at the dollar. What's going on with dollar? The dollar index, I told you guys yesterday that we should be looking at, let's take a look at the daily chart. We should be looking at this level right here, the 102 level. So if the dollar index is supposed to trend higher because the stock market is trending lower and all the uninversions that are happening in the bond market, the most probable move for the dollar index is to go higher. Watch the 102 level. If it clears this level, it can clearly head up to the 104 level. It's a beautiful chart, and if the dollar index is going higher, it's a very big signal for us to be more cautious. Keep a lot of powder dry on the sides. I wish I had some powder in my hands to show you guys how much powder I've got on the sides, just waiting for something to break and for Cash Booza to come back into this market and buy things at a cheaper price. There's absolutely nothing wrong at buying things cheap. It's called discount. There's a big discount, and the discount is coming, guys. The discount is coming. Keep the powder ready. when the discount happens, it won't last long. You gotta keep things ready in your hands. We'll take a look at the crypto market. What's going on with crypto? My chart is looking absolutely horrendous, but we will ignore that. We will take a look at crypto. So there is clear demand. Look at this, guys. Look at this. Clear demand at 53,800. Clear demand at 53,800. Look at this. 1, 2, 3, and 4 reactions on this level. Very strong level for Bitcoin, and I think that if Bitcoin goes higher, it is the right time for Bitcoin to make that move. And if Bitcoin is heading lower, it needs to break this level. If this level gets broken out, that's pretty much it. All hell breaks loose and crypto goes in a free fall. We'll take a look at some other stuff. We'll take a look at gold. Gold, oh my goodness, what an amazing chart this is. Even though the S&P sold off by over 1%, even though the Nasdaq was down over 2.5%, Bitcoin over 4%, semis getting destroyed. Look at this, the shiny stuff is still holding. This is the power of the shiny stuff. The gold is indestructible. It's a physical asset. Everyone needs to own it. It is something that needs to be in everyone's portfolio. And let's take a look at the weekly chart of gold. We will take a look at this, and look at this. What a beautiful chart. I absolutely love this. There's nothing wrong with this. I'm gonna do the cat dance for gold because I absolutely love this. Look at this. What a beautiful chart, guys. What a beautiful chart. And if this holds right here, there's potential for this to head up to $3,000 an ounce. I hope you guys liked today's show. If you did, give me a thumbs up and follow Cash Booza. I really appreciate it. And I'm gonna see you on Monday.